Have you been looking for a safe stock in an uncertain market? What if I told you that one of the world's largest energy companies could still have up to 38% upside according to Wall Street analysts? Today we're talking about Exxon Mobil, ticker symbol XOM. We'll analyze the stock chart, recent news, company fundamentals, and whether Exxon Mobil could be one of the best energy investments for 2026. Let's get started. Exxon Mobil is one of the largest oil and gas companies in the world. The company operates across oil production, natural gas, LNG exports, refining, petrochemicals. With operations in more than 60 countries, Exxon remains one of the most profitable energy giants on the planet. But the real question is, can the stock continue moving higher from here? Let's look at the chart first. XOM is currently trading around $141 per share. After a powerful rally earlier this year, the stock pulled back and is now consolidating near support. According to analyst estimates, average price target $170 potential. Upside approximately 21%, bull case target $195, potential upside more than 38%. On the downside, analysts see support around $130. From a technical perspective, the stock remains in a long-term uptrend. As long as XOM stays above the $130 support zone, the bullish trend remains intact. The next major resistance level is around $160. If that level breaks, a move toward $170 and eventually $195 becomes possible. Now let's talk about what's driving the company. The biggest growth story for Exxon Mobil is Guyana. Exxon and its partners continue expanding production in one of the most profitable oil discoveries of the century. Guyana production has become one of the lowest-cost oil operations in the world. This project is generating billions in profits and continues to grow rapidly. Another major catalyst is LNG. Exxon recently advanced its LNG business through the Golden Pass LNG project. As Europe and Asia continue demanding more natural gas, Exxon is positioned to benefit from long-term LNG demand growth. The company is also achieving record production levels. Management recently reported production near 4.7 million barrels of oil equivalent per day, one of the highest levels in decades. That's a huge positive sign for future cash flow growth. Let's examine the fundamentals. First, Exxon remains a cash-generating machine. The company continues producing billions of dollars in free cash flow every quarter. Second, shareholders are getting rewarded. Exxon continues paying a strong dividend while also repurchasing billions of dollars worth of stock. That means investors benefit both from income and potential capital appreciation. Third, Exxon has one of the strongest balance sheets in the energy sector. Compared with many competitors, the company has the financial strength to continue investing during economic downturns. Finally, management is targeting significant earnings growth through 2030. The combination of Guyana expansion and growth, Permian Basin production could support higher earnings for years. Of course, no investment is risk-free. The biggest risk is oil prices. If crude oil falls significantly, Exxon's earnings could decline. Another risk is geopolitical uncertainty. Events in the Middle East or global economic slowdowns can impact energy demand. Investors should also remember that energy stocks are cyclical. Even great companies experience volatility when commodity prices move lower. So, is Exxon Mobil stock a buy in 2026? Here's my conclusion. The company has strong fundamentals, record production growth, massive Guyana opportunity, expanding LNG business, attractive dividend, up to 38% analyst upside. For long-term investors looking for exposure to the energy sector, Exxon Mobil remains one of the strongest blue-chip energy stocks available today. If oil prices remain stable and production growth continues, Wall Street's $170 to $195 target range could be achievable over the next 12 months. What do you think about XOM stock? Do you believe Exxon Mobil can reach $195? Let me know in the comments below. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications for more stock market content. Thanks for watching, and I'll see you in the next video.